How's it going, everybody? Bryce Tuohey here, your host of the Tuohey Talk Show. And as you see in the title of the video, today we're not only going to be talking about the crash of Luna, the cryptocurrency that was once worth about $120 a few short weeks ago, and even just a couple days ago worth about $70, now worth 0.0005. And it was actually delisted from Binance once it hit 0.0005. It was going to be delisted, so it hit 0.0004. I should say once it was worth under 0.0005, it was going to be delisted. It has officially gotten delisted, and it is perhaps the craziest example of a crash that I've seen in quite some time. I put out a tweet the other day, last night. StocksTrade did as well. Basically, if you'd invested $1 million 5 days ago at $70, by the time it hit its low, you'd be left with 71 cents. And it's still technically trading now. It hit 0.50, right? 0.000001. You'd be left with 7 cents of that $1 million from 5 days, although maybe 6 days ago. Insane, right? And so we're going to talk about the hows, what it is. We're just going over all of it. And, to be completely honest, my understanding of, I'm not going to be the best person to ask about this. I'm not some stablecoin master, but I've done some research. We're going to pull up my screen. I'll kind of walk you through the story that I saw. It looks like this could have been either one, an extremely well executed trade with a lot of liquidity, or a full-out attack where they were going to go like that was their plan, was to do this. But first we need to start off with the basics for those of you that don't understand, what Luna even really is, and why it did this. We need some backstory here. So I'm not gonna waste too much time. We're just gonna get right into kind of what was Luna, and Luna was a cryptocurrency attached or traded with a stable coin known as Tether. And so what a stable coin is, and again, pardon me if I'm a little bit off, but this is a general synopsis, right? A stable coin is exactly what it's said. It's a coin that remains stable at $1. It more or less acts as a middleman, right? So if I want to go, let's say I've got $1,000 worth of Bitcoin, not 1,000 Bitcoin, $1,000 worth of Bitcoin that I want to transfer to a different cryptocurrency. Well, I can do that in my wallet, but I'm going to pay fees to do that. Or I'm going to pay fees. You're gonna have to pay fees to do that. And there are some that will do it for free, and that's kind of becoming a more it seems to become, I feel like that'll be the next wave, is like commission-free crypto trading, but we're not there yet. And so you have to pay a fee to do that. And so that those stable coins that are at $1, they're worth $1. You transfer your Bitcoin to the stable coin, and then your stable coin to whatever cryptocurrency you want to buy. And so Tether was is the stable coin that it's one of the stable coins. It was one of the top 3 stable coins, and so it's called a peg. It's pegged at $1. It doesn't really fluctuate from there. Like, it doesn't at all. Because so the other stablecoins, there are plenty of others, and they're backed by real world commodity or assets, right? They're backed by actual value. That's why they don't change. But what was interesting about Tether is that it wasn't backed by real world assets. I believe it was backed by Bitcoin or something of that to that extent, but it wasn't backed by a real world asset. Now, there was an algorithm that was used to essentially keep that still at $1, right? By the buying and selling of Bitcoin, to keep that pegged at $1. But someone exploited a massive flaw with that and really put liquidity to the test. And I'll get into that. I've actually got that pulled up as a Twitter thread right on my screen, and we'll get into that momentarily and just dig through it. But then we need to understand Luna is what really crashed basically 100%, right? Tether went from $1. It's now trading at 22 cents. So it's broken that peg from the dollar mark. And it's now essentially worthless because it's been completely exploited. But was even more interesting is that at any point you could, again, exchange 1 Tether for $1. So when it originally started taking that dip under $1, you were able to buy and re-exchange at $1 until that was rewritten, because this hasn't happened before. And so that also helped lead to the complete crash of Terra. I'm sorry, Terra. Terra is what it is. The Terra USDT. And that's what essentially led to that crash. And so Luna is tied to Terra. It trades, through Terra. Again, my understanding there. And so, but Luna itself is a cryptocurrency. It's not a stable coin. It's a cryptocurrency. And I haven't looked into all the roadmap and all that stuff. But if Terra crashes like it did, and I'll show you the chart in a moment, you can kind of see it here on my screen. But if that crashes, right, which isn't supposed to happen, Luna crashes. And now the thing is, Luna had a limited supply of coins, right? I believe, and don't quote me on the exact numbers here, but it was roughly a 300 million coin supply. Well, in order to essentially keep up the value of, this is the one that I believe is Tether, they had to increase supply. That was the only way to do it. And so that supply basically overnight, within like a couple days, went from 300 million, or it was either 30 or 300 million, to like 3 trillion. And so it's just an example of mass dilution that they had to do in order to keep, again, I believe Tether pegged as best it could to hold up that value. And it's Terra is the one that fell. Now I need to do a little bit of research. Tether crypto. Okay, yeah. Tether is what's still pegged there, but insane, right? And so I'm going to pull up a chart here. We're just going to go right into this. I'll get to, I'll get into Luna. I actually don't have that up anymore. Let's pull, there we go. I'll put it in a candlestick format for you. Again, on April 5th, this was trading at about $120. Today, it's been again delisted, is traded at 0.0004. Again, I'll bring up like a 30-minute chart for you just so you can really see the extent of this, and you can even see in the volume down here, right? It was trading, minimal volume, and then it was trading over. By the time we got down here, per 30 minutes was trading 80, 90, almost 100 billion. In volume. Obviously you're down at 0.0004. And so this led to the loss of a lot of people's money, right? Like it crushed people because you lost about 100% of what you had in there. And what I worry about is that you had people buying this dip. There we go. We had people buying this dip here. Because again, it's like, because no one really understood what was happening, why it was happening. All they knew is that you got this massive panic. At some point, it has to bounce, right? Well, there, I gotta point that way. It didn't. It never did. Bring my finger that way. There we go. It never. It had little mini bounces. We're looking at, down from, it went under $1 and it bounced up to nearly 10, and then subsequent. Then you even had bounces, from 0.004 up to 0.05. Within a matter of a couple hours, you had a 10xer. But like it never, that was assuming you bought the dip perfectly. Anyone who bought, I saw so many tweets. Oh my gosh, I was looking up, you can do the cash tag on Twitter. You can do the cash tag Luna, Luna. And I'd see tweets from, a couple days ago, people like, if this dips under 70, I'm loading. And it just kept going. You just had, again, mass dilution, which when basic economics, when supply increases, demand, and even if demand stays the same, price goes down. But generally, as supply increases, demand decreases, right? And so demand decreasing, there's mass panic, but it can't bounce because the supply grew so much. And I feel like a lot of people don't even understand that part of the equation, is that the supply like 20x'd overnight. So that is why, very basically, why this happened, right? From a very basic standpoint, you have the Terra stablecoin that was at, it was at $1, right? It's pegged at $1, and then it broke, which led to this mass panic. And then again, once we realized, okay, this no longer it's not real. It doesn't have any backing. It continued to crash, and this continued crash led to this continued crash. So you basically just have, I've never seen, the only other thing that I've seen kind of like this is when crude oil futures went under zero. Oh my gosh, that was insane. Truly insane. But that's about the craziest thing I've seen since then. And so again, I've got a couple, basically, I was looking up, because there's some terms we're about to get into that I don't even have a full understanding of, but again, I'm going to just, this right here is, kind of what a stablecoin is. And, where were we? So stablecoins aren't one of those ones, by the way. You'll see a lot of these a lot of coins that offer these, these APIs of like 18% where you're getting interest, and those are generally like Ponzi schemes. But aside from that, you're not really getting any interest. Again, right here, stablecoins are useful because they allow people to transact more seamlessly in cryptocurrencies that function as investments, such as Bitcoin or Ethereum. They form a bridge between volatile cryptocurrencies and stable real-world assets like fiat. And again, with Luna not being tied to a real-world asset, it could lead to destruction, and it wasn't expected. Obviously, if it was expected, it would never have been up so high. But now let's get into this thread that just really, really interested me, right? So this is On-Chain Wizard on Twitter, and Matt Monaco actually sent me this because I wanted a better understanding. And so, again, the UST attack, right? And again, this is kind of speculation here, this thread. So make of it what you want, but dig in here. Again, where no one's talking about how much money the attacker made, or really how brilliant this is. I would agree. And so late March, the Luna Foundation Guard starts buying Bitcoin to help back the UST, that pegged $1 stablecoin. And they started accumulating Bitcoin on 3/22, and by March 26th, they had a $1 billion Bitcoin position. And then this, according to the On-Chain Wizard, is leg number one that made this attack brilliant. And so this is the part where I'm actually pretty confused myself. And so if any of you guys know, talk down in the comments below, or if you're in chat right now. So then there's these different, like 4-pool, 3-pool. I don't know what that means. I was trying to kind of get some information on that, but it was kind of tough for me to see. But Frax announcement for UST on April 1st. And this was the announcement. We'll open this in a new tab, maybe. Maybe we won't. We'll just go back. In the future, we'll direct emissions to other stablecoins that pair against the 4-pool. Okay, so 4-pool literally might just be like 4 pools of stablecoin. That's kind of what I was getting. But starve the 3-pool, 4-pool, exciting new primitive on EVM chains where curve lies, balancing truly decentralized stablecoins with off-chain liquidity, right? So kind of what we're going at there, where this is not a real-world stabilized coin. And so then this is, again, I'm literally just reading word for word here, so take of it what you want. I'll kind of give my reaction or my thoughts here at the end, but we don't know when the attacker borrowed 100,000 Bitcoin to start the position, other than that it was sold into Kwang's, he imagines it was sold into Kwang's buying, who, again, was buying all this Bitcoin. So shorting into this position, the Luna Foundation Guard, bought 15,000 Bitcoin between March 27th and April 11th, which about an average price of 42,000. These are the pictures attached here. So this is what the LFG Luna now backstops the UST peg with $2.3 billion worth of Bitcoin USD. With these, again, I'm assuming this is the 4-pool, right? So they have a $350 million position in Luna, 1.5 billion in Bitcoin, and then these other USDT, which is the Tether, I believe. Terra's US. No, that might be Terra. But anyways, so it's again just backed by a different. And so now by March 27th, the total balance of Luna backed, the reserve, quote unquote, is 1.16 billion. All right. But someone has a 4.2 billion short position built, And over that same time, the attacker builds a $1 billion OTC position in UST, in that peg, right? They're in peg, $1 billion worth. That stage is now set to create a run on the bank and get paid on your BTC short. In anticipation of the 4-pool, the Luna Foundation guard initially removes 150 million from the 3-pool liquidity right here. This is the community pool. And this curve was pulled, or liquidity was pulled on 5/8 when the attacker uses 350 million of UST to drain curve liquidity. Again, this is kind of like advanced stuff, but I'll explain a little bit here. And we're look at the charts; they are interesting. So, the pool balance start draining, and then you see just this mass separation here, which should give you an idea of, again, the liquidity and just that absolute drainage. And then this only starts through depegging, right? So when we looked at that Terra chart, it just started it. It just really, I want to make sure I'm not, yeah. So it just really brought this down slightly. LFG begins selling Bitcoin to defend the peg, causing downward pressure on Bitcoin. Again, because this is pegged on the value, or on Bitcoin. So they have to do this. They have to sell Bitcoin in order to defend. And the run on the UST was just getting started. And then this liquidity drained. The attacker used the remainder of their 1 billion OTC UST position, about 650 million, to start offloading on Binance. Withdrawals from Anchor turned from concern to panic. And then this caused the real depeg. Like, the depeg was truly caused by just the mass panic. And then in order to keep going, they had to increase supply. So LFG selling Bitcoin to restore that peg, that $1 value, right? That we see this bounce. Eventually the chain gets congested. And I don't know what a CEX is, suspends withdrawals of UST, which means, right, this is what I think we were talking about earlier when I was saying that at one point, you could convert at any time your UST for $1, right? You can do that. You can just convert it to $1. So when it's down at like 80 and 70, you can convert it to $1. Now, eventually, though, those withdrawals are suspended. And that obviously that's going to cause mass panic. Clearly something's wrong. UST depegs to 60 cents at the bottom. And this is May 10th, mind you, right? That this is tweeted. But as Bitcoin is crashing here, that just led from an absolute plunge down to below 80 cents nearly instantly. Crypto community panics. As they wonder how much Bitcoin will be sold to keep the peg, like how much Bitcoin is needed to be sold in order to keep that $1 threshold, right? Because at some point you have to keep selling and selling and selling in order to keep that there. Luna just pukes itself. Again, very clearly, I'll bring that chart back up. Pukes itself because of its redemption mechanism that they have to sell Bitcoin. And so now this is more in line with the attacker part now, like the attacker of the trade. And so this is speculation, it seems like, but there aren't details on where the covers are, but if they were able to cover the entire position around 32,000, that means they made nearly $1 billion on the short. And again, Bitcoin, for reference, Bitcoin went down to 26,000. Let's go back to, there we go. It makes that weird noise for some reason, this site for the charting, but Bitcoin went down to 26,000. So this is under the assumption that the attacker covered their entire position around 950 million. And so that being said, again, speculation here, but on the 350 million of the UST curve dump, it probably didn't take much of a loss, assuming around $11 million. Assume that all Binance dumps were done at 80 cents, another 125 million. Cost of doing business. It's and again, that's like, almost think of that, right, in more simple terms, as like your borrow fee. Not really, but you get the point. Like, it's just a fee that was needed in order to make this position possible. They had to hold both of these positions different sides. So for a grand total profit of, and because remember they were holding the UST, they were holding that peg, that stable coin, and they had to sell. So grand total profit of roughly 8.15 million. And so there is actually a borrow cost that's important to note, right? If you're shorting Bitcoin, which I don't know what borrows look like on that. But before the borrow cost of actually shorting Bitcoin is the perfect playground for the trade as liquidity was there to pull it off, while having LFG involved in Bitcoin and foreseeing they would sell to keep the peg, right? Like, again, now we're just breaking this all down. In order to keep that peg, Bitcoin would need to be sold. So if they cause a panic, they have to, if the attacker causes that panic, causes that drop in Bitcoin, where there is a lot of liquidity, LFG would have to sell Bitcoin. They'd have to keep driving the price down further, causing like a crypto panic, which is what happened. Lastly, liquidity being low on 3 pool in advance of 4 pool allowed the attacker to drain it with only 350 million, causing a broader panic in both BTC and UST, right? Like, we saw the entire crypto market had a really, really rough past couple of days because of this, because of that Bitcoin drop. Bitcoin just got smacked, and not to say, I mean, Bitcoin's kind of been on a downward trajectory for a while now. We're quite well off highs, but I mean, it was stable in the 30s, and that caused that panic on Bitcoin. And so, let's see, this involves a lot of speculation assumptions, and that's fair. There is a lot of speculation in this exact post, right? There's a lot of speculation, the numbers and whatnot, in terms of how much was made, the position sizing for some, but either way, yeah, if this was an attack, they made a lot of money. And it was a very brilliant attack. You just needed the liquidity to be able to do this, to attack Bitcoin, something that is extremely, extremely volatile, but very liquid. And knowing that Luna is the coin attached to, let's see, I want to make sure I'm reading this right. Because there's there's Tether and there's Terra, and Terra. Okay, Terra, in which there's Terra. And so Tether is still pegged. But in order to keep Tether pegged, Luna would have to be, or the Luna LFG would have to be selling Bitcoin. Definitely complicated. I'm not trying to make this sound like it's very easy and understandable, because there's a lot of terminology, a lot of speculation from that post. But again, the important thing to know, and I'll show you guys here, yeah, again, the main assumption, or the main factor here, is that the stable coin itself isn't backed by a real world asset. Like, just pretend one of these, I'm sure there is one of these stable coins, go full screen here. Assume one of these stable coins is backed by like gold, right? Gold isn't all that volatile. And so the buying and selling of such would need to just be very, very minimal to keep that value pegged at $1. Bitcoin, in theory, right, they're able to make those sells and adjust, even in the case of, smaller panics, because we haven't seen, like, and even still, after all has been said and done, like, that Bitcoin panic, yeah, it was a thing, but it wasn't like down to zero, right? Like, it bounced off 26,000. But I mean, it was like, I think it fell 25% overnight. Like, that's enough. That's enough of a drop, and enough to prove why the tying to Bitcoin was too volatile and too easy to manipulate. And so, again, it's just so much happening here. But that's why, because of the way it was backed, someone with enough money was able to play out either an attack or a trade to exploit those flaws. And that's why now I'm going to kind of transition away from this, and I'm sorry if this was a little complicated. I'll make sure to post the link to this if you want to read into it again on your own here. I'll post the link to this thread. This will be posted in the description. But this, to me, is why, like, I'm not saying, I think crypto does absolutely have a place in our future. There's no doubt about that in my mind. However, the internet did too in 2000, except almost every internet company went bankrupt, right? All of these coins that are trading on massively inflated value, they're nothing. I mean, even a lot of NFTs, right? Like, this is all a bubble. And at some point, it has to pop in order for it to stabilize. And there's a lot of benefit, like I said, to having a couple great ones. But in order to get a couple great ones, the other ones need to fall, right? Luna, for example, Luna falls down to nearly zero. Like, is just about as close to zero as you could get. We're going to call it 100% for all intents and purposes. And this, I'm not saying everyone's going to fall to zero, but coins don't really go, you can't, like, a company can go bankrupt. They can legally go file for bankruptcy. Crypto is still a relatively unregulated space. A coin doesn't file for bankruptcy. It plummets. There's no halts, 24/7 trading because it's a currency. I'm not saying it's a recipe for disaster on every single cryptocurrency, but I am saying that there's a lot of potential for just a lot more panic in the overall crypto market. And eventually the ones that are relevant for our future will remain, right? They will be the ones that we can continue to use. And there's so much unknown here still, right? Like, obviously the blockchain, and then it ties back to the blockchain. Blockchain is what's really why crypto does have so much potential. But will that change, right? The internet has certainly changed a lot. And I'm going to go back and use the internet example here in terms of how the internet's changed, how the internet bubble popped, the .com bubble pop in the early 2000s, and then how that prevailed. But like, even the internet companies back then, you had the really, really big ones that, even then they were still a gamble. But the internet has changed since, even in the past 20 years. I say even, I mean basically right when the internet started to explode. That really, really hot, with the internet getting really hot in the late 90s, early 2000s, even when it was booming hot, everyone was, talking about the internet, and it's changed, right? From, I think it's Web 2, like the original internet, to Web 3, and I think Web 4 is now like this blockchain space. But Web 2 basically is like an open forum. There was no algorithms. There were none of that. You just typed in a website and you went and did your thing. You can still go find pictures, like memes of just these old forums, these old chat rooms that were more or less, that's what the internet was. You did have social media, but again, a lot different. If you think back, even if you think now to what a social media is, it really is just a forum. But it's now so heavily monetized, algorithm-based. It's a lot different than what it used to be. And that's changed in 20 years, right? You go back, if you could time travel, and you bring someone that was using the internet daily back in 2000, and then you fast forward them today, and you're like, hey, this is the internet. You'd have a lot of similar features. You type in your website that you want to go to and whatnot, and you go to your website, but it's going to look so much different. It's going to be just night and day different. And I know a lot of people went through that. And so crypto could very, very well be the same thing. Like, the blockchain in itself should remain prevalent throughout the next 10, 20, 30 years. And if that happens, obviously, then it probably becomes a regular part of our lives. But will it remain the same exact purpose that we use it for today? I would argue, right? We have a lot of people investing in cryptocurrency because they see it as the way of the future. They see the blockchain as the way of the future. But again, it's a currency, right? Like, you're going to have a lot of these that are meaningless, that have no real backing. You're going to see them fall. And the blockchain will remain, but which cryptocurrencies will? Will the utilization of cryptocurrencies change? Will we move to an all crypto-based world that uses the blockchain? Will the US dollar essentially, will all of this change? And that's where we need to be looking 10, 20 years down the road, and we'll see it. We don't know how it's going to actually go through. We don't know what regulations are going to look like. We can speculate, but we can't know for sure. And just trying to get back on track here, it's the Luna examples, right? It's the Luna charts. It's the Terra pegs. We're gonna go back to it one more time. It's this type of action, right? Of things that right now we think have to be true. It can't fall from $1. It's pegged at $1. It can't. It's not possible. Well, it is, because when stuff like this happens, flaws are exploited. They are taken advantage of at the cost of investors, right? And we're going to have to go through a lot more of these, whether that means we're going through more 100% drops or more 20-30% drops, because at some point that's another big issue with cryptocurrency, is it's very easy to use leverage, and a lot of people are over leveraged, because again, an investment, we're thinking 10, 20 years down the road. A trade, we're not. And I think a lot of people have a very flawed conception of what an investment is, because you're not using, for the most part, unless you're a massive fund, but you're not using massive leverage on cryptocurrency. If you look at it as an investment, you're looking for long-term potential, because when you use leverage, even if you're just using 4-to-1, a 25% drop from your average wipes out, you're blown up. You're at zero. And as an investor, I'm gonna just for fun, right? I'm gonna pull up the SPY, right? Pull up the SPY. We're down. Oh, nice. I mean, a nice bounce today, but actually, even better one would be the Nasdaq. If you bought the top on margin, full margin, you're already down in what a couple months. You're blown up on margin. Because as an investor, you don't care necessarily. Like, you are trying to get in on dips and whatnot, right? Like, we get that. But like, you're looking years down the road. You're looking years that it might take to build into a position, months, years to build into a position. And I've just seen way too many examples of people that are trading crypto, that are investing in crypto, using so much size, just all in one buy or on one dip, not realizing that if it goes down, again, even as just 4-to-1 leverage, the 2-to-1 leverage, a 50% drop. We're already down 50% off highs from Bitcoin. Under 50%, you blow up. And so it's going to, and these over leveraged positions will very likely lead to a lot more panic. It's going to a lot of forced selling, a lot of margin calls that are going to deflate the value of crypto. And then once all of that is over, once the mass panic is over, once the people who have lost all of their money are out, that's generally when we see the bounce. And during that time, it'll probably be another year or two. If we see, I'm not saying Bitcoin, I'm not saying Ethereum, I'm not saying Solana, they're all going to see these massive panics, but they probably will continue to see some drawdowns. And I know there's other factors that I'm not completely aware of, or I'm not claiming to be a crypto expert by any means, but I'm just looking from a very, very basic standpoint. You're going to see a lot of price fluctuation. And if you're over leveraged, you're not going to be able to, you literally will get margin called for it. And so anyways, what I'm getting at here is that it's going to take more of these Lunas, more of these flaws that are exploited before we find real value in cryptocurrency. So use this, right? Use Luna for all of you people that are going, buy the dip. It has to go back up. It doesn't, right? It doesn't have to go back up. And it's scary. So know your risk every time, even as an investor. Know your risk, know your tolerance, and just understand management of your position sizing, cash management. There are so many basic things. We're going to have to go back to the basics for a lot of investment because we've just been in a bubble for so long. And so obviously Luna's a very extreme example, but even if you're buying this massive dip, if there is a massive flaw in the coin, in the company, it's fundamentally not like it's proven that it's got no value. It has no value. This is the equivalent of bankruptcy for cryptocurrency. So anyways, I feel like I've been talking in circles a little bit there. So this is going to be a little bit of a shorter episode, but I did want to just recap why this all happened. And again, I'll do a quick recap right here. Stablecoins are at one equivalent of $1, right? That's what a stablecoin is. It serves as a middleman from a volatile cryptocurrency to another. And so it's a way to move your money at the same value as a US dollar. Good, it acts as a fiat. It's backed. It has to be backed by something. And normally by real world assets that are less volatile, less, they're real world stuff, tangible, they're fiats. Then you have Luna, which is, I'll just read it here for you. Luna is a South Korean-based traditional cryptocurrency whose value is tied to a stablecoin called Terra. Terra, in turn, is supposed to be tied to the US dollar. Terra, again, that's stablecoin. But Terra, now let's go to what is Terra? Yeah, well, it's backed by Bitcoin, something very volatile. And if I'm a little bit wrong on that, I apologize, but its backing is, again, related to Bitcoin. Bitcoin is a volatile cryptocurrency. And again, as we saw here, so knowing that in order to keep Terra or Tether pegged at $1, the selling of Bitcoin would have to occur. It'd have to. And so, as such, accumulating essentially forcing a mass panic on Bitcoin would then lead to accelerated selling of Bitcoin by LFG, Luna. And then in doing such, and again, not having never seen it before, when Terra was no longer pegged at $1, it did recover due to the selling of Bitcoin. But again, you're instantly flawed there, because once it goes under $1, you're able to exchange 1 Terra for $1. And if it's trading under $1, I did see some people capitalized on that, so that's pretty cool. But when you're selling, it's free money. That can't last. It's free money. And so once that's taken away from the promise of being able to convert 1 Terra to $1, we get mass panic. And with Luna being attached to Terra, once Terra's mass panicking, Luna continues to sell, and they have to continue to dilute the value of, or the available quantity, the supply of Luna, in order to keep all of that flowing, in order to keep Tether at $1. All of this is because Tether needs to stay at $1. And in order to do that, well, we just saw the whole picture. Bitcoin falls, Luna continues selling Bitcoin, Luna dilutes the value of their coin 20-fold overnight, and then you lead to the crash of Luna. Now, that being said, Tether is still at $1. But the Terra, and I might have just been like misusing Tether, because Terra was the one that's supposed to be pegged, and Terra is no longer pegged. And so I might completely be wrong on Tether, but I do believe they're somehow related. Again, I know, this is all just so complex, but you should get a good understanding here. And again, with Terra falling, then you have Luna crashing because it is essentially worthless. And in order to keep doing so, that's what we get. So anyways, I just kind of hurt my brain a little bit because I'm still confused by all this. Like, I understand I'm confused, so I'm not expecting you guys have, and maybe some of you do have a better understanding, but that is the general reasoning for why Luna is now a worthless cryptocurrency. Down 100%, down 99.99995 craziness. So anyways, I know I probably messed up on some stuff, so let me know down in the comments below if you have a better explanation for anything I did mess up on, just to help the viewers out that are watching this. Again, I'm just here to give a very general reasoning, but I know there's more in-depth talk on this, in-depth data, whatever. So leave that down in the comments below so we can all have a better understanding too. This is a community, right? Leave that down below. Let me know if, hopefully, I hope, fingers crossed, none of you guys lost everything on Luna, but if you did, use it as a lesson. And at the end of the day, our biggest losses are always our lessons. And also down in the comments too, let me know what you think is the future of cryptocurrency and the blockchain. Did this in itself exploit a massive flaw? Or is this just a one-off? I'd love to hear your guys' thoughts too. And before you go, be sure to hit the like button, be sure to be subscribed to the channel, and turn on your post notifications, because we do this every Friday and we have so much other fantastic content coming out daily. So make sure you're all doing all that, and I will see you guys next week on Friday's Tuohey Talk Show. Thank you for watching. This is your host,